Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our head of research, Jasper Lawler, to discuss Trump, tax cuts and the impact of his tour of Asia on markets, a review of US earnings seasons, the breakout in Japan Nikkei index, the pound, as well as Theresa May's problems. We'll also discuss the key upcoming earnings and economic data for the week. So starting with corporate results, it's a slow start on Monday. Then we have Vodafone, Land Securities, Home Depot and TK Maxx owner TJX companies on Tuesday. TalkTalk, Game Digital, Experian and Cisco on Wednesday. Royal Mail, British Land, 3i Group and Walmart on Thursday. Then we finish with Foot Locker on Friday. Moving on to the economic calendar, on Monday there's not much of note, but China industrial production and retail sales on Tuesday, as well as UK inflation and Eurozone GDP. On Wednesday, UK unemployment and earnings, US inflation and US retail sales. On Thursday, UK retail sales and Eurozone CPI. And finally, inflation and retail sales data from Canada on Friday. So Jasper, what is the situation with Donald Trump?
Well, I guess he's having effects on markets in two ways at the moment, Kelly. It's his Asia tour and this ongoing battle for tax cuts, obviously. So tax cuts made one big leap forward in that a bill was put out there. Markets generally approved of it. We talked about some of the details before, 20% corporate tax rate, etc. But it's hitting a bit of a stumbling block, particularly in the US Senate. And there have been talks, even from Republicans in the Senate, about pushing it back to 2019 when it would be rolled out. And so it's looking like even spring next year is optimistic. So obviously markets just don't want to wait for it any longer. As far as the Asia tour, obviously it was Japan and China, which are two massive trading partners of the US. And it was just interesting to hear Trump, whether he kind of backed off from his former comments on trade or not. He basically didn't back up at all and came up with some quite strongly worded comments that he wants to readdress the balance in the US's favour, obviously bring some of that trade surplus in Japan and China back to the US. So that, I think, goes some way to explain maybe a little bit of weakness in the dollar at the moment, because he's said he wants a weaker dollar, and obviously that weaker dollar helps US exports, would partly help readdress that balance. And then the only other thing is North Korea, but I don't think that's too much of a concern at the moment. Maybe slightly explain a bit of a wobble that we saw in the Nikkei on Thursday, because obviously Japan is just located very close to North Korea, and comments that something has to be done soon, or something along those lines. It's maybe a little bit of a worry, and why there was a bit of risk-off behaviour at the tail end of last week.
Mm-hmm. Now we're just coming to the end of the US earnings seasons. What's your take so far?
Well, I'll throw a few stats your way. So basically we've had about 9 out of 10 companies report so far. And so we've seen 6% earnings growth in the S&P 500, which is obviously great. And we were only expecting 3% as of September 30th, according to FactSet. Yeah. So, doing better than expected. Energy sector leading the way, as we had sort of said at the start of the earnings season. That was as expected. What was encouraging was that IT and materials sectors also saw a lot of upward surprises. And so there's been quite a few companies actually guiding higher in earnings, which again is positive. And I think it all contributes to why we're seeing such a strong run in equities at the moment. It's hard to really pin it all down on earnings because, yes, there's good earnings growth, but the indices have really been rocketing higher with barely any pullbacks at all recently. So I know you can't blame it all on that, but certainly these results, to my mind, don't really offer any reason by themselves for why markets need to pull back.
Right, okay. And Japanese shares outshining US shares for once. How long will that last?
Well, very simply in terms of this situation, for me, as a technical analyst, I view breakouts as positive. So if you're slightly more fundamentally orientated, you get worried about valuations when when markets rise. For me, it looks very positive. Asia in general, if you look at some of the ETFs for Asia as a broader region, are breaking out to record highs. And in Japan, we obviously saw the Nikkei hit its highest in 25 years at 23,000. So it looks good to me, and I think there's a few reasons. Japanese growth is picking up. We've obviously just had those Japanese elections where Abe is going to keep monetary stimulus going, it looks like. That obviously keeps the yen depressed. That's good for earnings. And then we're just seeing some good standout companies anyway. Sony and Nintendo, for example, really fully participating in this rally in technology stocks with some great products that people are responding to. So it's all looking fairly positive, and I think this breakout has legs.
Yeah, okay, great. And so both politics and economic factors driving the pound as per usual. How do you see the balance between the two now?
Well, there's obviously a lot of talk about Priti Patel and Michael Fallon, so there are a few cabinet ministers falling out of Theresa May's cabinet. It's obviously not a good look for her, but I don't think it's the stuff of a downfall of a government, so I think probably it's been slightly overplayed. And so for that reason, I see that political situation as more of a temporary reason to hang on top of the pound. So we did see the pound, even in days when the dollar was weaker, when other currencies were benefiting, the pound was still a bit lackluster. So we certainly saw the effect of it. But for me, still ultimately, I think what's driving the pound and why it can actually probably potentially hold the 130 level is that it comes down to the fact that we've just had a rate hike, and we should be on the beginnings of a kind of gradual rate hike cycle now. And so even though the Bank of England sound very dovish, I still think that eventually they follow the Federal Reserve with a path of higher rates. So that, for me, is a reason why the pound has probably bottomed.
Right, okay. Thank you so much, Jasper, and thank you all for watching. If you wish to get these videos as they're released, please follow us on social media.